Ladies and gentlemen of the crypto space, we're live at 12:36 a.m. p.m. on Tuesday, April 27th. I don't even know what time it is anymore. Guys got me running around trying to catch the stream. I got to tell stories. What kind of day am I going to have if I don't get to tell some stories? That's what we're doing. Today's story is monetary velocity. Monetary velocity is pure fire for a financial system, and it begs the question, which comes first, the economic activity or the monetary velocity? So monetary velocity is a measure of broad transaction volume, so to speak, the velocity of money. So um, obviously, it's not. It itself is not economic activity. It's a measurement of it. But what's fascinating is when you have increased economic activity, you have basically momentum that's let fire on the under the butt of people to participate in the financial activity. So it really gets a financial system moving. But the point is, it's a chicken and the egg. How do you get a financial system moving if the thing that gets a financial system moving is the fact that the financial system is moving? You guys see what I'm saying there? It's kind of like a self-fulfilling prophecy, and that's why the word momentum comes to mind. Let's jump into the stream. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Wade Mappers is in the house. A little late this afternoon. Obviously, I'm a little late, 11:30. This is the usual start time. 7 people in the stream, 3 likes. We can do a little bit better. So I got up on the screen Gemini's credit card, which I can't wait for. Now we're talking about a real deal major industry player offering crypto credit, which basically means it's a credit card, but the rewards are denominated in a crypto asset of choice rather than whatever stupid rewards points we get. 10,000 rewards points. You could buy $20 worth of stuff on Amazon. No, I want some damn crypto rewards points. Is that like 1980s crypto right there? Rewards points. Rewards points chain. Oh, those credit card companies, there's all these legacy financial products and services are just yeah, done. Done, 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 done. So I look forward to this credit card. I'll be getting rid of every single credit card. Not that I have any. I have American Express and a Visa card for Amazon. And well, you got to keep the damn Visa card for Amazon. They're giving you like 5-10% back on every single Amazon purchase. So just saying. Everything else, crypto cash back. Boom. Costco executive members in the house. Kristen, I saw you tweet about Gemini credit card. Any additional thoughts? Yeah, there's no reason to use any other credit card. I've been waiting for a crypto credit card. Now I'm hopeful and speculating that we could pay the credit card balance with crypto. And then I literally could operate in an entire crypto environment, make my capital, convert to GUSD, transfer GUSD to Gemini, pay my credit card. No more ACH bullshit to a bank account. I'm operating in terms of GUSD, Gemini's stablecoin, which there is incredible amounts of liquidity available on Curve. So it's easy to get anything into GUSD denomination. And boom, swap it over to Gemini. Boom, pay your credit card. But then again, I don't even think that you need to do, Gemini needs to do crypto payments because GUSD, when you swap to Gemini, is instantly converted to US dollars, which you'll be able to pay your credit card balance with. I'm inclined to think that this is going to be the card I've been looking for, that I could swipe my card, get crypto cash back, and pay my credit card using crypto. Crypto, crypto, crypto. It's about time. Crypto yogis in the house, always a pleasure. Dysfunctionalism. It's kind of what I feel like today, my friend. Kristen says, would you even have a bank account when credit cards like Gemini are actually out? Well, you need a bank account because some crazy, crazy human beings on this paper say they want a check. I mean, what the heck? So, the town water bill. Okay, you want a piece of paper? So you need a checking account, I guess. I mean, what the hell's the point of a check? It's useless. You want to spend money, You have a credit card, you swipe it. You want to pay your credit card, you have crypto, you pay it. You literally don't need a bank account for anything logical or reasonable or anything that makes modern sense. Just saying. Ian's in the house. Thank you. I try. I could be better and I could do more. And I will do more. I'm determined to do more. Dysfunctionalism, your thoughts on the new M stable IMSD yield? IMUSD yield is through the roof. It's been through the roof. It's been 30, 40, 50% on Ethereum. And now M stable is dipping its toes in the Polygon pool. Woo woo. Whole point of the stream was monetary velocity. Do you see this chart? I mean, this is Matic in just this year. 2 cents to 60 cents, 30x on the money. That's a lot of money. There was no reason to buy it before now. It was all speculation. And I do not invest in speculation. I invest in an active executing narrative. That narrative is now. And as you can see what happened, this thing is ripping. This thing literally ripped from 30 cents to 60 cents overnight. Doesn't mean I'm going to buy this. I sure as heck I'm not going to buy this asset. Think I'm going to buy something that's up that has a. I'm not going to buy this. That's not the point. What I'm going to do is I'm going to get 47% yield denominated in Matic. And I'm going to build my Matic bag using dollars. So I'm taking no risk and I'm building a Matic position. Not bad. This is like 4 days. That curve is cranking out cash. So, you know what's really cool? So about 6 grand. You know, this goes up quick. I'm making like $1,000 a day off that curve position. But if you go over to CoinGecko and you take a look at Matic or Polygon, talking about number 50, $3 billion market cap. What's the asset that preceded Matic? Binance, BNB. That's the platform that had monetary velocity most previously. Before that was Ethereum. So Ethereum, Binance, and now Matic have significant monetary velocity. So Matic, I expect to do another 10, 20x. It'll catch up. It'll be 50 bill, 30, 40, 50 bill. It'll easily get into the top 10. But it'll take time. And I'm not going to buy it. I'm not buying Matic. I have no interest in buying Matic. I am buying less and less crypto assets nowadays because dollars work so well. And I don't want the risk of losing dollars. So it's the same thing for any size portfolio, and that's actually advice I gave on the my Discord channel a little bit ago. If you have a $50,000 portfolio, 45 grand belongs in very secure, interest-bearing, yield-producing, working its butt off positions. And you take 5 grand, that's a large chunk, but since it's a relatively small portfolio, you gotta that just makes sense. So this is what I would do if I had 50 grand. 45 grand would be 30, 40, 50, 60% interest. You guys mentioned an M stable. There's plenty of ways to get 30, 40, 50% interest in the crypto space. Again, 50% of my dollars on Aave and Polygon. Then you take 5 grand, one bet. And frankly, my bet would be Matic, actually. I'd take that 5 grand and turn it into a 10x or a 20x, and that 5 grand turns into a 50 or 100 grand. And now you just turn your 50 grand portfolio into a 100 or 150 grand portfolio. The hard thing about the bet is the FOMO. Look at all these glorious assets and all this glorious green that everyone wants to be part of. That green turns to red really quickly, and before you know it, that 5 grand turns into $2,500. I don't trust these markets. I love the markets, but I don't trust the participants. They're wolves. We're sheep. Even myself with my portfolio size. They'll take our money. They'll take your money. Stop thinking that crypto is free and easy. It's not free and easy money. There's market actors, there's wolves that are out there, and their whole purpose is to capitalize on people's emotions, watch them pile into assets, and then they sell and take your money. So it's not free money. Just be more careful, extend more due diligence, take less risk. Look, I literally just told you guys what to do with a $50,000 portfolio. It's not an exact prescription. The best thing I could say is that's what I would do. And it's something as a point of reference. And it'll be near impossible for most people to take one single crypto bet. Could you imagine having 45 grand in USDC and you're earning cash on it? Then you take $5,000 worth of Matic, and that's it. No Ethereum, no Bitcoin, no nothing, no nada, no nothing. You literally have two assets in your portfolio. But that would be a strategic way to manage such a portfolio. The vast majority is protected and growing. You go to work, you make your paycheck, you save your money, you take a small position, 5, 10%, and you make a bet. And if that bet does a 10x, you change the entire structure of your portfolio. If that $5,000 bet does a 10x, you just doubled your entire portfolio. That changes everything. Not risking your portfolio, not risking destroying, obliterating your portfolio. Stop trying to make as much money as possible. You try and make as much money as possible. Sure, fortunes are made, but fortunes are lost just as quickly. Chet's in the house. Hello, my friend. 37 people in the stream, 15 likes. We can do better. Costco, sharks are in the water. Damn right. I'm a bit of a shark at times. I watch it do a. I watched Visor go to $2.40 from like 40 cents, and of course I sold. So that's a shark maneuver, and I don't like doing that really. It's too volatile. I can't hold the asset right now. I mean, you guys seen the chart? There's a large amount of emissions. It's inflationary, which is fine. You need to get assets into circulation. But the problem is the sharks. Someone throws in $10 million into liquidity mining. They get a lot of Visor as emissions. And they're going to dump it because it's pure profit. And they're dumping it on people that are just taking a position. And they're profiting on the fact that they were early and someone else was late. So I don't have a stomach for that much volatility right now. I was lucky, and I have a bit of a method position. Not that we're seeing much of dev activity from method. We're seeing actually a fair amount of dev activity from Visor, which is it's actually nice to see. Kind of wish I had a Visor position, but excuse me, but I don't, and that doesn't bother me. Just because you like a narrative or a story doesn't mean you have to own something. And just because there's money to be made doesn't mean one, you're going to actually make it, and two, there's risk on everything. So I have like 30,000 method that I earned in like a week staking. It was like 2,800% yield. Oh my God. Throwing like 100 grand into that staking position. So I'm thankful. I got in, I got out, I capitalized, and I have my method. I have no interest in liquidating it because it's free. I'm going to hold it. And what happens, happens. I'll see what happens. I got a whole bunch of XTK too. I'm not in any. I wanted to avoid my method of avoiding risk to acquire my XTK position, which I never bought any XTK. I yield farmed, and right now none of the positions suit my fancy. If it connects, really? There we go. So I don't really want to take an excessive position in Aave, Kyber Network, 1inch, or even just XDK directly. It's not something I could sit with, but BNT has been catching my fancy, and I have a nice BNT position, but I took a relatively large position. I threw about 50 grand into this, 25. So it's 50 grand worth of BNT because literally that's what's so cool about the BNT, XBNT. It's XBNTA paired with BNT. So this is actually a liquidity mining opportunity with no impermanent loss. And that's pretty cool. I mean, the only time you don't get impermanent loss is like Curve. This is like Link and S Link and there's a couple of other ones like that. But this is a derivative asset which has the price of BNT paired with BNT is not going to have any impermanent loss. But this is it's pretty cool. So I'll be able to stack some additional XTK. Let's see how long this lasts. This is getting diluted pretty quick. 977 a day, which is nice, but it's I mean, this built up. That's I had a bunch of. I was doing like 1 inch and had some Kyber at some point, and I had Aave for a while that and just cranked out XDK. So I have an XDK position, I have a method position, I have no mist position, and I have no visor position. Mist has a large amount of persons that acquired a huge amount of assets early on. What do you think is going to happen when the price goes up 2, 3, 4, 5x? It's going to dump just as quick. It doesn't mean it's going to dump lower to where it is now, but the second that thing shoots up, people are going to be taking profits because there's a lot of cost basis that is much lower. I'm more of a fan of watching a bull market, which is basically appreciation, sell, cost basis reset, appreciation. It's the normal ripsaw pattern that everyone is accustomed to with the bull market. And when you look at assets like this, that is not no ripsaw pattern. There's no formation here. This is risk. And where's Mist? Mist was up at $210, $20. It's at 176. Not touching it with a 10-foot pole. It broke the trend that I was looking at. You see that blue line right there. So just because I think a narrative is ridiculously awesome, and I think this is a wonderful narrative with a time horizon that's extremely short that comes around very, very, very rare, doesn't mean an asset is in a good position to capitalize on the narrative. The narrative and the asset are mutually exclusive phenomena. In any case, I'm exposed to the narrative. I don't think Method is targeting Uniswap, but it's sharing in the narrative. But in any case, XTK is targeting Uniswap. So it will be exposed to the narrative. So if I'm exposed to the narrative of Uniswap, V3, NFT, vault managers, I don't need to worry that I don't have an asset that I think has much potential, speculatively speaking, of course. I like what this is doing. I think they have a lot of memes, and that's big. And they clearly have developers. They wrote the original code base. What I also noticed is that Visor has developers as well, because they're building additions to the code base. And it's not a stagnant GitHub repository. We'll take a look. 4 days, 11 days, 7 days, 7 days. I mean, it's not as nearly as much as Mist, but there's 14 commits. Repo, read me. Let's take a look at let's see if there's anything interesting. Let's take a look at the repo. What are they defining? I think that maybe they're defining rules. Yeah, these are rules. I'd be interested to see more of their code base as it comes out. You know, so they're doing a lot of local dev environment work. So if you go to GitHub, Alchemist, these boys are much more source control interactive. 3 hours ago, 4 hours ago, yesterday. but it's also just UI work. So the question really is it's not even a question. The observation is that both of them are speculative. What the heck are they building with regard to Uniswap v3? It's possible Alchemist isn't even targeting Uniswap v3, but what they're targeting is the NFT vault managers of LP tokens, ERC20s, and possibly 721s, which are the LP tokens designed for Uniswap v3. So it's speculative. We do not know what the platform will do until it comes out. Do I love the narrative? Sure. Am I holding the asset? No. Do I want to stomach the volatility? Absolutely not. Let me go back to the stream and hit everyone's commentary. Kristen says, if you are convinced that a project will be worth more in the future, like Ethereum, for example, why would you want to sell it? Holding long-term too risky a strategy 10 years down the road? Yeah, for me, time horizon, I'm not waiting 10 years. I want my capital now. So I hold no Ethereum right now. What, it goes up 20%? There's plenty of assets that go up 20%. What, it goes up 50%? There's plenty of assets that go up 50%. Do you really care if it's Ethereum or token XYZ that goes up 50%? What you're interested in is outperforming the market. Folks buy into the narrative of an asset and they feel that their capital will do better with a specific asset. But in the end, all you care about is the percent. If Ethereum goes up 10% or Uniswap goes up 10%, which was the better investment? It's the same 10%. It doesn't matter where your money was allocated. I think that's a big thing that a lot of people, kind of occurs in the crypto space. Some people would say, no, you can't hold Uniswap because Ethereum is the king. It's going to be deflationary and it's incredible. It's going to change the world, future of France and all that fancy stuff. But some people would say Uniswap, that's all where all the swapping's occurring. It's the future of AMM, automated market makers, and DEXs. They both went up 10%. It doesn't matter where your capital is allocated. What you just want to do is outperform the market without losing any freaking money. Ryan says, how do you think XTK technicals are doing at the moment? I don't know. I haven't looked. I don't hold any XTK at the moment. I showed you guys. I have vesting XTK. So I don't even consider this part of my portfolio. It's not even in my portfolio. I just know that I have XTK and, you know, let's see the technicals. Horrible. Horrible, horrible technicals. They look like shit. Means nothing with regard to the narrative, means nothing with regard to the Uniswap v3 story. It means nothing with regard to March 5th coming up and 200,000 people realizing that this is going to be a critical component of their liquidity providing LP position management strategies. So price action means nothing. Now, you can play technicals, but if you're going to play technicals, I much prefer to play technicals on the large caps. But you need a lot of capital. If you throw 100 grand into Ethereum and you see a technical breakout that does a 10% rip to the upside, that's cool. You made 10 grand, maybe in an hour. So that's technicals. All right, I know. Fine. Maybe the narrative for XDK, Mist, Visor, and Method, you want a long-term play. What is long-term? Why? Why do you say long-term? Because you don't want 10%. You want 100%. You want 500%. You want 1,000%. Now we're digging into really what you want to do. What do you want to do? I say that because is your goal to make as much money as possible? Do you think if you set your goal to making as much money as possible that it's going to happen? And that you have nothing to lose? I don't like that ideology because everyone has something to lose. You worked for your money. You literally went to a job that you probably hated. They gave you cash for your time and you have nothing to lose? I'm sorry, guys. I don't agree with that. I don't agree with that at all. We have everything to lose. Lito says, I have USDC and 88 MPH fixed rate bond right now. Do you think they need to fix their 80s UI look to be taken seriously? Same applies to Curve. Curve is obviously DOS or Microsoft old school days. No, I do not think the user interface matters much in the short term. Obviously, as the DeFi space broadly gains more mainstream adoption, which it's not. It's basically nobody in the general public even knows about this stuff. So I don't know. I don't think that is. I don't think it's overwhelmingly relevant, the user interface. Bobak in the house. No, have you checked out MStable Save? Yeah, I like MStable. MStable is a big deal. They've been around for a long time. 30, 40, 50% yields for a long time, guys. You guys taking all this risk, all these volatile assets, hoping for a 10,000% move to the upside, but you could have gotten pretty reliable 30, 40, 50% the entire time. The game isn't to make as much money as possible. The game is to make as much money as possible without fucking losing your money. You see what I'm saying there? Montana's in the house, so nice to have an option to not LP against Ether XDK yield with XBNT, right? XBNT-A and BNT is the pairing, so it's basically like a curve link S-link pairing. So you have no impermanent loss, and you're going to get your XTK position for free. I don't even put it on the portfolio. I'm just like, do I have XTK? Sure. What's the price? I don't care. If it happens, it happens. So the goal with an LP position like that, like Method, Visor, Mist, and XDK, get your liquidity in and you get it out. If you get your liquidity out and it's unscathed, it's like a special ops mission. Get in, get out, and get your emissions. Establish your position. You're not going to make any money necessarily on your LP position. Your goal is to not lose any damn money doing it. So I have that. I have a little method position. Method. So I got in, got out. Oh no, it's on another account. It's so slow when I'm streaming. Anyway, whatever. I got a method position on another account. No, yeah, have you checked out Stable, my man? Montana, Dysfunction, Bancor too, right? Yeah, yeah, it's cool. XP, I mean, literally, it's an auto compounding Bancor token. That's so cool. So cool. I mean, at this point, literally, with the pool options and the gas cost, might actually pull my capital out of my BNT out of Bancor and just put it into XBNT. This is probably the better, the cooler, or the most awesome X token thus far because it's Bancor's compounding, which is cranking out 30, 40, 50% returns. Um, 1 inch isn't. Kyber's not. It's fine. Synthetics is decent returns too. Smaller wallets, yeah, yeah. I mean, Bancor's it's a good deal. I mean, just Google the definition of Bancor and you'll see the Wikipedia article. So I like when they name their project what they were thinking about. It's pretty cool. Were gas fees are prohibitive to compound? That's right, Montana. But then again, oh, look at gas prices. How do you like that? This is the first time in a couple of days we've seen 88. I mean, we've seen like 40, 50, 60 Gwei for a bit. Look at that. What's going on? We got some spikes in gas prices again. Damn, we were down in the 30s, 39. I haven't seen 39 since last year. Crazy sauce. Aaron, hey Noah, with the urine vaults, the Curve Ave vault, should I deposit the Ave then first to urine? No, just use the Zap feature. Let's go straight there. Urine.finance. Nowadays, they'll zap it for you right into the Curve vault, which is pretty cool. So you get your community boosted CRV using Yearn or Convex Finance in the future when they launch. And Yearn's a pain in the neck when I'm streaming because it takes a bit to load. But you could deposit dollars right into these vaults. There's your curve Ave. See, look, it literally reloads the whole page. Been here, done that. Where is it? Oh my God, stop moving. Okay, that's not working as planned. Show. So you can deposit directly in here. Apparently, for some reason, it's not dollars. I guess you could deposit Ethereum right in there, and then it'll give you your three. Well, that's three curve. I don't know. Point being, you don't have to deposit LP tokens because those curve contracts are relatively expensive to interact with. Wondering if I go straight into Yearn, then I won't earn an APY from the Aave platform. Am I getting it wrong? Uh, well, just look at the yield on here, and you get this yield about 36% because they don't boost all the way. Um, it depends on how much VE curve that they have and however they crafted the allocation to their various vaults. So this is obviously boosted 30%. Base curve APR 30%, boost one. Okay, so this is boosted 1.2x the MUSD pool. It goes up to 2.5 boost. So you could literally make more capital. Boost is at 2.32, so the curve Aave pool is actually boosted quite nicely. Quite nicely. Gillis is in the house. Always a pleasure. James, don't worry, you're late. We're always here, and these bad boys are recorded for history. James, I'll be happy with not losing hard-earned money. I have low standards. Don't lose your capital. Up only. But that means you have to take less risk. I got 50% cash right now. Straight up in curve on Polygon. And it's building a Matic position. So the narrative of that value allocation is 50% cash is working at a rate of 50% to build a position that I think is going to go asymmetrical is going to asymmetrically appreciate to the tune of probably 20x in the midterm. Let's say midterm. Matic gets up to BNB, 30, 40, 50, 60 billion dollars maybe. I mean, the monetary velocity is it's apparent and obvious at this point. It's probably one of the clearest plays for significant reshaping of the top 10 right about now, all things considered, what's going on and all. Chapatel, my man, if X token folds, can you still get your XBNT out? What do you mean fold, as in like a deck of cards? X token has been around for a while, and how would you get it out? I mean, you can interact with the smart contracts directly, but what does fold mean? The website goes down? I mean, this is a wonderful conversation about risk and position sizing, and this is why 5% of the portfolio. That's what I was saying at the beginning of the stream. A $50,000 portfolio could really only make about one solid bet, in my opinion, looking for a 10x. And I would argue that there's probably uh, an opportunity cost going into an X token position with a portfolio of about that size, because I don't think you're going to get a 10x off of an XBNTA, BNT LP position on an X token. It's not going to be enough emissions. 5 grand. You get a little bit here and there. I think there's better opportunity cost with you take that one bet. I think the Matic play is probably the logical play for the smaller portfolios right now. But how many people with a relatively modest sized portfolio are going to sell every single asset they own? All Bitcoin, all Ethereum, everything, and have USDC protected, earning 30, 40, 50% of the money, and you put 5 grand into Matic, hoping that Matic becomes basically what BNB currently is. And there's countless reasons to think that that's foreshadowed at this point. And then that 50 grand portfolio turns into 100 or 150 grand. And that's how you reshape a portfolio. And that's how you grow a portfolio by taking a moderate, actually a minimum amount of risk, about 5, 10% of the portfolio risked. If it doesn't work out, you didn't destroy your portfolio. You know why that's such an important way to potentially manage your portfolio? Because the vast majority of people in this crypto space destroy their portfolios. Destroy. Have you looked into Bow Finance? Yeah, I don't have any interest in that stuff. Ryan, my man, how do you always seem to find the cool projects before anyone else? I don't know. X Token's been around a long time. I guess November of last year. I don't know. Yeah, let's hooking it up. I appreciate it. I really do. Chat shut down. You know how you manage that? What happens if XBNT gets shut down? Only put 3% of your portfolio into it. So if it gets shut down, you can watch your capital go bye-bye and you don't have to worry too much. Risk management is probably most proactively handled with position sizing. That's how I would handle it, and that's how I think about it. 67 people in the stream, 30 likes. We can do better. I wish I had some other charts up, but Matic at 60 cents is crazy. I mean, QuickSwap is like $550 right now. That's crazy sauce too. So that doesn't mean buy this stuff. This stuff is up immensely. I don't know how do you play a chart like that? Look at that daily chart. How are you going to play that? There's nothing to play. This is a non-buyable chart. There is not a single opportunity on this chart. And if you're starting to go into lower time frames, you take an increased risk. I'm going to touch this with a 10-foot pole. Now, I guess maybe that's a falling wedge or maybe a descending triangle of sorts. More of a descending triangle, I guess, but there's a little bit of slope to the lows. Not really, maybe. I can't take a position in it. Fundamentals tell you where to look, and they tell me to look here, but technicals say, But that's why I'm not buying it. Let's take a look at Visor. Can't buy this either. This looks like a damn head and shoulder. This looks like a head and shoulders. Anyone else seeing that? No bueno zone right there. Head and shoulders. I'm not buying a head and shoulder. That's crazy. Only in crypto do head and shoulders break out. Oh my God. Jonathan says, have you taken a look at Idle Finance? Yeah, Idle's cool. Would I buy it? No. Labro, for a 50K portfolio, if I go 45K USDC, how much of that should be VECRV? I probably would avoid Curve, albeit Curve is a heck of an investment locked as VE Curve. I think that's basically retirement material in the coming years. But the problem is you don't have enough capital to take advantage of such positions. You have to work with the size of your portfolio. You can't overextend the portfolio. If you overextend the portfolio, you're taking on additional risk and you're jeopardizing the money you've made. So you can't have a V curve position. You can't have this. You can't have that. And it is what it is. You have to work with what you have. It's like poker. You play your hand. You can't play somebody else's. So I would say no VE curve, and I would say you're probably in a position to consider Yearn or Convex when it comes out, or Curve on Polygon, earning 40-something percent spot, which will probably get diluted relatively quickly. Food for thought. Tim's in the house, new to your channel, love the content, deposited USDT and Curve via Polygon, have a decent size, unsecured LOC available, 2% interest. Thoughts on leveraging a small amount? Leverage is okay, especially when you're borrowing dollars and you're using the dollars in the crypto space. Leverage and legacy finance is you're borrowing dollars, but you're buying an asset that can either appreciate or depreciate, which is basically gambling. But what's interesting in the crypto space, which is what I do with MakerDAO, is I borrow dollars and I use the dollars. I can pay back the debt because I have the dollars. So it's a completely different risk profile to that kind of trade, that kind of strategy. So take on debt, but manage your debt. And I would not, for instance, I would not allocate borrowed money to a volatile asset. Maybe I'll take some borrowed money and I'll play a technical trade where if it's like an ascending triangle or a falling wedge and it's screaming buy opportunity. I rarely take technical trades that are screaming buy opportunity. The last technical trade I took that was screaming buy opportunity that also had a strong narrative was Rook. It's like a 400 grand profit on that bad boy. And then Visor actually, Visor had a technical setup right here. So I played this. This was a falling wedge. That's right. And we had the strong narrative, the falling wedge, and the technical break, and that was, it was like 180 grand, something like that. So that was a good one. But otherwise, right now, there's no setup. Maybe if you zoom in, what are we in the 4 hour? You can see somewhat of a symmetric triangle. But this is basically a falling wedge that broke out and is trending horizontal. I don't think there's anything strong on here to place a bet with. But you only make bets with small parts of the portfolio. And you only make bets that you're very confident in. I mean, literally, if you have to, if you don't have much experience with technical analysis, don't make the bets, please. Don't risk it. Why? Because you don't need to. You can make gains and you could do basic with crypto what you can't do in the legacy financial system. You literally can't save for retirement. You can't do this. You can't do that because the narrative is dead. Robert Kiyosaki says savers are losers, and if you try and save, you will lose. So that's why we take these risks in the crypto space, because we can't save anymore. Let's keep it going. Let's finish this up in a couple minutes. Dysfunctionalism. Have you checked out Element Finance? Very cool. I like new projects. Nothing's. I don't have any motivation really to look into much right now. I'm just excited watching Polygon Matic basically go vertical. So I'm getting interest in an asset that's going vertical. I just want to keep telling you guys, like, you guys are looking for all this fancy stuff, all these fancy DeFi protocols, and literally I took dollars and put it on Curve on Polygon, and I'm getting 50% interest on my dollars in an asset that's probably going to go apeshit. So I would not buy Matic. So none of what I'm saying about how awesome Polygon is means I'm buying Matic. I'm not buying it. So I took my dollars and I'm getting interest. Now, if you have a smaller amount of dollars, you can get less Matic, but it's your portfolio. It's what it's capable of. It's like erectile dysfunction. Your portfolio is capable of getting it up or it's not. There's something like that. Some stupid analogy. Your portfolio can do only what it's capable of doing. And if you try and make your portfolio do more than what it's capable of doing, that's when you get in hot water. So deal with the emotions, the fear of missing out, and take less risk. That was a horrible analogy. Please don't haunt me for the rest of my days because of that. Chad, if X token shut down, can you did you mention that already, my friend? If I understand, you can still pull out via smart contracts correctly. I guess you'd have to look up the smart contract for what do you mean shut down? Their website going offline? Uh Yeah, you can interact with the smart contracts. There's a withdrawal function. I mean, literally, that's all these D apps do is interact with smart contracts. And you could withdraw your LP tokens, and then you could take those LP tokens, which are Bancor LP positions. But is Bancor going to shut down also? Shit, maybe they just shut down the Ethereum network entirely. My friend, 5% of the portfolio or less. Don't do more. If you're feeling the way you're feeling and you have risk, it's more important to not feel the way you're feeling. So to manage the way you're feeling, you put in a position that you don't feel the way you're feeling about. So let's say you have a 50 grand portfolio, the magic mystical 50 grand portfolio. You put in 2 grand, 3 grand into that position. A fraction of the portfolio. Stop putting in large chunks of your portfolio into stuff. Thanks, Noah. Can you demonstrate how to go to Curve on Polygon? No, my friend. I do not do demonstrations. DeFi Dad. DeFi Dad has all the tutorials known to man. You'll find them on Twitter. DeFi Dad. Kristen says, no, I really appreciate your insights. Have you looked into Y-axis? I have not. I am not interested in anything outside of the stuff I look at. I'm interested in my portfolio, and I'm sure as I don't push for new protocol. I played okay, fine. I played around with X Ruler briefly. I was looking into so Yearn had some stuff they did. Check this out. Hmm. Oh no. Oh, I lost you guys for a second. I'm back. So Yearn had some other pools that they were looking on, but I was looking at the X rule. This is interesting. There's a lot of stuff that is fun. Just don't overextend yourself, guys. Don't overextend yourself. Let me wrap this up. Website's back, chat first. But I'm going to wrap this up right now. Can you send USDC? There's currently an automatic network in the positive the Polygon curve. Yes, that is correct. Oh God, they shut the Montana, my man. CZ, no, don't do it, CZ. All right, Tuesday at 1:22 p.m., April 27th. I really appreciate everyone's joining, subscribing, and just don't do it for yourself. You see someone else buying Doge, just slap them a little bit and tell them they could do better. And that's the whole point. We can do better and make better decisions, and we make better decisions together. 62 people in the stream, 34 likes. Right now, we can do better. So tell everyone to subscribe. Jump on the forum. I got like 60, 70 people in there. They're talking up a storm, risk management strategies. We're having a good old time. It's pretty cool. It's going to make a difference for a lot of people. I wish everyone a wonderful day, and I will see you all tomorrow. Peace.